Hey, what's up, traders? We're going to look at QQQ, which is an ETF of the NASDAQ, Nas100. And then we're also going to be looking at eBay. You don't want to miss this. I'm going to make this really simple, really quick and easy. Let's go ahead and dive right into it. All right, traders. So let's start off with eBay. Again, really quick, really simple. I want to give you this framework of how we enter trades overall. And typically, you want to start off on the higher time frame. You will always hear us from BK Trading Academy say to start off on a higher time frame. It gives us the overall direction of price because that gives me a bias of whether if I should buy or sell. And then ultimately, it'll show me my supply and demand levels. Now, why am I caring about supply and demand? Is because it rules the world. Supply and demand rules every single market in the world. And just to kind of give you brief information on that, what I'm looking for on the daily time frame is where price is currently at, which is right here, and how far can it continue to climb. Overall, eBay has been climbing in its uptrend here. And guess what? It started the trend at this level. And why did it start at this level? Is because this is a demand zone. Demand attracts buyers. Now, when price came down here and it started to consolidate a bit, how do I know where to possibly buy? I would buy here because guess what? In the past, this is where our trend ended from our downtrend right there. Let's scroll up here. And guess what? Look at this peak. Price rose all the way up here to this peak, and then it started a downtrend. Usually when you see the beginning of a trend, it will start a new trend overall, or typically, not 100% of the times, but most of the times. So with that in mind, we have our downtrend. Price stopped here, created a demand level. Price started to consolidate. This must have been a really strong demand level because it stopped and pivoted right from this huge trend. To give you an indication, back in October 2021, all the way down here to October 2022, that was a 54% drop. Huge. Again, here's our double bottom right here. Double bottoms or double top indicates a possible trend reversal. Here's a brief illustration here that I found on this website. You have an uptrend here, creates a top, pulls back to a neckline, comes back up here. Remember, we were starting in an uptrend. A double top simply means buyers were in control but couldn't continue. And oftentimes, when price is too expensive, price needs to drop to attract new buyers. And that's when we see a new trend. Now, the same thing in reverse for a double bottom. Here is our bottom one, bottom two from our downtrend, created a neckline. This was our kind of our minor resistance or our resistance level. This would have been our neckline right here. Notice how it respected it multiple times. So this is a very strong neckline right here. And you can even have traded this and consolidated trading from resistance to support, resistance to support. Eventually it's going to break out because we hit a demand level. The main difference between a demand level and a support level is that they both hold the floor, but a demand level is more stable and it's usually a trend reversal. A support level you'll find within a trend. So as we continue to rise, this would be a support level right here. Like our highs right here. In an uptrend, this is our high, our low, higher, higher low. So our lows would be a support level. This is a temporary pullback from an uptrend, a temporary pullback from an uptrend, a temporary pullback. So that is more of a support level. A demand level is what causes trend reversals from an ending of a trend. We have a 54 or 55% drop. It pivots on a dime and it starts to reverse. So this is a demand level right here. And guess what? What is price doing now? Traders, what are you doing? If you're enjoying this right now, I want you to hit that subscribe button and that like button. Hit that thumbs up. That really means a lot to us. It simply gives other traders the chance to find this channel, to learn just like you. I truly appreciate that. Just takes 2 seconds, even if that. And feel free to drop a comment if you have any questions. I'll be sure to respond to you. But once you do that, we'll get you right back to the video. All right, just waiting a few more seconds. All right, here you go. We're in an uptrend, so it's safer to buy than to sell. That's just what it is. As a trader, you typically want to trade with the trend, unless if you're at a demand level or supply level, which is at the top. So what I'm going to go ahead and do is start my trend right here. This is my trend line. I'm going to extend it just a bit here. Now, some of you guys may say, well, why not start it down here? No need to start it from down there. I'm only looking to capture price from where price is currently at. And then I'm going to clone this right here, get the exact same angle and take it to the highs. Now, I'm trapping price. That's the entire purpose of price action trading. It's trapping price and it becomes a little bit more predictable, right? So I can see it start to drop, but why did it pivot and stop here? Let's go to the weekly time frame to get a better picture. This is why it pivoted right here. Let me take off my channel here again. And if I draw a straight horizontal line from this peak to here, this is where it reversed. And this is why we typically draw a wide rectangle just to capture price action. For example, in demand, price came down to here, but when it came back for this double bottom, it came closer to the top of the rectangle. So you want to encompass as much price action as possible. For example, here it came in the middle of the red line at the top. So anywhere within those zones, I will be looking to execute a trade. And guess what? It's been climbing for so long that once it gets to a supply level, we can anticipate either one, a trend reversal or a significant drop completely. Because look, if price is so expensive or too much, you can apply this to buying a home, clothes, whatever. If it's too expensive, it needs to attract buyers. And guess what? This is where our academy entered our trade. So if I go here to eBay, you can see how I put this in earlier this morning. We can see on the monthly time frame where it's here and we've entered the trade right here and this is our private stocks community. We've entered the trade here and I believe it's going to continue to drop. Now, how far can I take the trade? Can I take it down to here? Now, it's going to take months and months and months to do that. Some people can do that. Of course, you want to be cautious of commission and so on and so forth, but I would take it to a safe area. Let's draw this trend line one more time. I'm going to capture here. I'm going to spread it out just a little bit more to give it room to breathe for price action to move. I'm going to take this here and create a channel. And you could absolutely exit in the middle of the channel, right? You can do that. Or what I also foresee happening is price coming down to this zone here. Now you may be saying, well, Brian, why this zone? Let me show you here. Let me scroll out to, let's say, the 4-hour time frame. And notice you will always find support and resistance levels within larger support and resistance levels, aka supply and demand. Notice how price has been respecting this here multiple times day after day on this 4-hour time frame. You can even see it on the weekly. I've seen it on the weekly time frame. And what I see on the weekly time frame are these wicks. These wicks here are telling us that buyers tried to shoot it up, but they couldn't week after week after week until it finally breaks out because it has to go high enough to our supply level. And now that it hit our supply level, we're in for the ultimate discount. So I will be writing this down all the way to about $71, give or take, per share. Now let's look at QQQ. For those who are unfamiliar with QQQ, QQQ is an ETF and it tracks the NASDAQ, the Nas100, the top 100 tech companies in the world in the United States. So we can see that price has been climbing. And this is from April 2025, from when Trump paused the tariffs. And to me, that was just a reset. You always want to buy when it's low. That was simply a reset. You will see the exact same thing with SPY. SPY is the S&P 500, which is the top 500 companies in the world. Look at this similar setup here. Here's SPY, and then here's NASDAQ, the exact same setup, right? So these are the top companies in the world, and this is why it's the exact same setup. So according to my last analysis, we would sell at supply. The only thing that I would say be cautious on is that for Fortune 100 companies, Fortune 500 companies, which consist in QQQ, for example, Microsoft, Apple, NVIDIA, Alphabet, Google, all that stuff is all wrapped into QQQ. It typically rises in nature. So if I go to the weekly time frame and I just scroll out, look at this steep downtrend, right? I'm years and decades away. This is 2010, and look how it continues to climb from the past. So these are the top 100 companies in the world. They're going to climb. The value continues to climb. So for me, it's less riskier to buy. And now that we're at this level, we can possibly see some downside movement, but you also want to take note of fundamentals. What do I mean by fundamentals? Economic news. I like to look at Bloomberg economic calendar to see what's going to happen. Today is Tuesday, June 24th. We see that Fed Chair Powell testifies. We're not sure exactly what's going to happen with that. He's also testifying on Wednesday. We see initial jobless claims on Thursday. We had a CB consumer confidence report that came out earlier today. It came in negative. The actual came in at 93 and the forecast was at 99. So it dropped a bit. And because we're trading the NASDAQ, which is in QQQ, I am assuming that price may continue to drop. And I think that things happen purposely. I think that these markets do this intentionally, knowing that the NASDAQ is at a supply level. So we may start to see a drop, but I'm not taking this trade quite yet. I need to see a wick rejection. So tomorrow, what I want to see a wick. I want to see more exposed wick here on this white candle. I need to see a reason why I need to sell. And if not, it's going to break higher and then I will wait for a retest. Now, if you don't have a margin account and you're trading stocks and you're like, you know what, I don't have enough money in my account, or I don't have a margin account to sell, not to worry, you can trade the inverse ETF, which is SQQ, and it does the exact opposite as QQQ. So if you think that price for QQQ is going to drop, but you don't have enough money in your account to sell, because you need a specific amount of money to sell in your trading account, or if you don't have a margin account, you can just go to SQQ and buy. And guess what? It's only at $21 currently right now, which is a lot cheaper than investing in QQQ. So remember, SQQQ and QQQ are ETFs. The SQQQ is the inverse ETF for QQQ, which is the NASDAQ. So I have a few more trades that we went over in our academy. If you're looking for your hands to be held and you're looking for solid mentorship where I'm there along with Kenya there with you 24/7 in a private community with structured modules and videos to help you learn for a lifetime, I suggest that you look in the description below where you can find access to our community. I've been trading for almost 15 years. Kenya's been trading for almost 10 years, and we've been doing this for a long time. And we're confident in the strategies that we provide. And it's all based on price action, all listed on our journal. And this is why I'm confident with my trading psychologies, because I journal every single trade. I don't enter every single trade, and I don't look to get in a lot of trades. I only get in high probability setups. From January to June of this year, I've only entered 37 trades. That's it. And these were high probability, and I feel comfortable with this. We provide this journal to our students once they pass the risk management strategy so that they can understand how to write it and be consistent with their trading style. Guys, please like this video. Give me a thumbs up if this absolutely makes sense to you. Share this as well for those who are looking for quality content when it comes to trading, quality mentorships. Other than that, guys, I will see you in the next video. Feel free to comment. I'll be sure to respond to you. God bless.